Hello everyone! We are from group 3G.
Which means three girls, not an outdated technology.
In today's video, we will be presenting the 5 companies that we've chosen for the LSIS competition 2023. As investor, we will provide the reasons behind picking our stocks, along with further analysis and how much we allocate the money. Therefore, let's get right into the video. So, the stocks we've chosen are these 5 companies, and they are SIDO, ICBP, KLBF, Lsis, and MAPI. And the reason we chose these stocks is by looking at the company's future growth and their PA average from 15 times to 30 times. Because from an investor's point of view, if it's over 40 times, the stocks are already so expensive and the company will be going nowhere. They need to increase their sales and profitability to generate more profits from the company.
All in all, low PE is cheaper compared to high PE, and we want to invest in high PE companies only if the sales and profit growth are high too. And plus, if it says low PE but the company is losing money, you have to stay away from those too. Overall, we want to invest in cash-making companies and growing profits. So the first company that we're chosen is PT Industri Jamu dan Farmasi Sido Muncul Tbk with the symbol SIDO. So SIDO is a pharmaceutical, traditional medicine, health food and beverage and herbal ingredient processing company that can benefit the community and environment. The controlling owner, President Director David Hidayat, and the President Commissioner Jonathan Sojan Hidayat. And there's a list from the board of member of PT Industri Jamu Sido Muncul. And for the technical analysis of SIDO, based on the graph from SIDO over here, we can see that their stock rebounded from the previous slump in 2022. And based on this, we can analyze, especially with the rainy season that makes almost everyone sick or knows someone who is sick, that SIDO stock will continue to rise. And SIDO also announced that they would expand their production this time around to match the consumers' demand, whether in Indonesia or even abroad. So the next one is PT Indofood CBP Sukses Makmur Tbk, or ICBP for their stocks. Is one of the established and leading players in the consumer branded product sector. They are engaged in diverse business categories including noodles, dairy, snack foods, food seasoning, nutrition, and special food and beverages. ICBP also operates a packaging businesses, producing flexible and corrugated packaging for our products. They provide everyday solution for consumers of all ages across market segments with more than 30 leading product brands. Many of these brands enjoy significant market position in Indonesia, backed by a decade of trust and loyalty from millions of consumers. ICBP's business operations are supported by more than 60 plants located in key areas across Indonesia, enabling them to stay closer to their consumer and ensure product freshness and availability. Most of their products are easily available in general and modern trade across the archipelago. They are fully supported by Indofood's extensive distribution network in Indonesia to meet their consumer demand in a timely and efficient manner. Besides Indonesia, ICBP also export their products worldwide. So the ICBP's controlling owner is the President Director Antoni Salim and the President Commissioner Manuel V. Pangilingan. And for the fundamental analysis, ICBP exceeds the Indonesian market, which returned 5.4% over the past year. ICBP is less volatile than 70% of Indonesian stocks over the past 3 months, typically moving around 3% a week. And their weekly volatility has been stable over the past year. ITBP is also a good value based on its price to earning ratio, which is 25.5 times compared to their peer average, which is 34.4 times. And their trading is below their estimate fair value. So based on the graph from ITBP, we can see that ITBP has an upturn pattern, and especially with the upcoming Ramadan month, we can conclude that ITBP stocks will continue to rise. For the fundamental analysis, the first one is ITBP exceed the Indonesian market, which returned 5.4% over the past year. And ITBP is also less volatile than 70% of Indonesian stocks over the past 3 months, typically moving around 3% a week. And also their volatility has been stable over the past year. And ITBP is also a good value based on its price to earning ratio, which is 25.5 times compared to their peer average, which is 34.4 times. And their forecast earning growth, which is 25.7% per year, is above the saving rates, which is 7.1%. And ITBP's earnings are forecast to grow faster than Indonesian market, around 25.7 per year. And for the Indonesian market, 10.6% per year. And ITBP's earnings are expected to grow significantly over the next 3 years because their earnings have grown by 10% per year over the past 5 years. And also they have high quality earnings. Their short-term assets exceed their short-term liabilities. Their interest payment on their debts are also well covered by their EBIT. ITBP's dividend is higher than the bottom 25% of dividend payers in Indonesian market. And ITBP's dividend payment have increased over the past 10 years. With their reasonable payout ratio, which is 53%, ITBP's dividend payment are covered by their earnings. With their reasonably low cash payout ratio, which is 40.1%, ITBP's dividend payments are well covered by cash flow.
PT Kalbe Pharma is the market leader in Indonesia pharmaceutical industry. Through its subsidiaries, the company also engages in manufacturing of consumer health and nutritional products. In addition, the company also operates in distribution and logistics industry. And this is the structure of company PT Kalbe Pharma, and the president director of PT Kalbe Pharma is Lsis, and the president of commissioner is Bernadette Ruth Irawati Setiani. PT Kalbe Pharma forecasting earning growth is 12.6 year. Dividends payment have increased over the past 10 years, and with its reasonably low payout ratio, it is 48.2%, and Kalbe Pharma dividend payments are well covered by earnings. And this is the example of history graph of PT Kalbe Pharma. So based on the graph, we can see that the after sideways trend from mid-2020 to 2022, Kalbe graph is changing towards the uptrend. The high trading volume of a particular stock indicates that it is in demand among investors. And currently, the stock is at a relatively high point. And the next stocks is Lsis. Lsis is a home improvement and lifestyle product retailer targeting the middle to upper income buyers. And Ace Hardware is the largest modern network in the retail home improvement and lifestyle business in Indonesia. And the company is the master of franchise or even license holder of the Ace Hardware brand in Indonesia, and is appointed by US-based Ace Hardware Corporation. And the president director is Prabowo Widya Krisnadi, and the president of commissioner is Kunchoro Wibowo. Based on the Lsis financial report,
Lsis weekly volatility 7% has been stable over the past year, and Lsis is good value based on its price to earnings ratio. It is 12.6 times compared to the peer average. It is 19 times. To compare the price to earnings ratio, Lsis is also good value compared with Asian specialty retail industry, which is average 13.6 times. And for Lsis, based on the graph, you can see that Lsis has a downtrend chart. But after this breakdown until January 2023, you can see that the trend already started to rebound.
So, moving on to our next company, we chose Mitra Adir Perkasa, also known as MAPI, and they are essentially engaged in retail trading of clothing, shoes, accessories, bags, and sport equipment in more than 1,800 stores or outlets located in Jakarta, Bandung, Surabaya, Bali, Medan, and other cities in Indonesia. And this company, it actually started its commercial operations back in 1995. And as a group, we chose this company because with the COVID-19 pandemic passing by, it is such a good opportunity for investors to invest in. And moving back to the topic, aside from its core business, the controlling owner of Mitra Adir Perkasa has its president director as Herman Bernhard Leopold Mantiri, and their president commissioner Sri Indrastuti Hadiputran. And as you can see here, this is a more detailed description of their organizational structure. Now, moving on from its core business and organizational structure, here is a chart trend of MAPI, and as you can see, it is going up, which means it is an uptrend. So, MAPI exceeded the Indonesian multi-line retail industry, which returned 6.8% over the past year. It also exceeded the Indonesian market, which returned 5.4% over the past year. And MAPI is not significantly more volatile than the rest of the Indonesian stocks over the past 3 months, and it typically moves positive, negative 7% a week. And MAPI's weekly volatility is 7%, which has been stable over the past year. MAPI is also a good value based on its price-to-earnings ratio, which is 12.2 times compared to the Asian multi-line retail industry, which has an average of 17.9 times. And MAPI has a good value based on its price-to-earnings ratio, which is 12.2 times compared to the estimated fair price-to-earning ratio, which is 13.5 times. And aside from this, MAPI's revenue is 12.7% per year and is forecast to grow faster than the Indonesian market, which is typically 10.4% per year. And MAPI's return on equity is forecast to be high in 3 years' time with 22.3%. And it also has quality earnings, high quality earnings, and it has been profitable in the past, and MAPI's earnings have been growing by 6.1% per year over the past 5 years. And MAPI's return on equity is estimated to be 26.8%, and that is considered quite high. Moreover, MAPI's short-term assets is estimated to be 9,677, and it exceeded their short-term liabilities, which is around 6,875. And MAPI's short-term assets is around 9,677, which exceeded their long-term liabilities, which is around 3,218. Moreover, MAPI has more cash than its total debt. As I mentioned earlier, MAPI's debt-to-equity ratio has reduced from 85.9% to 13.6% over the past 5 years. And MAPI's debt is overall covered by their operating cash flow, which is estimated to be 396%. And MAPI's interest payment on its debt are well covered by EBIT, which is around 7.3 times coverage.
Okay, so as you can see, these are the table of stocks that we have bought. and we are currently allocating the money by dividing the percentage of their prospects in the future. The most company that were invested are for ICBP or PT Indofood CBP Sukses Makmur Tbk and KLBF or PT Kalbe Pharma Tbk, which is 30% each. With the economic conditions starting to recover and expectation of the COVID-19 transition towards endemic, KLBF target net sales growth to be 11% until 15% with the projected net profit growth. And moving on to the consumer goods sector, ICBP is a defensive stock option during economic recession because the risk of loss is relatively small. Growing 15% in 2022 with a solid market position and fundamentals, ICBP shares still offer an attractive potential going forward for investors. Therefore, it is good for long-term investment.
So the next stocks are Lsis and Sido, and we allocated 15% to these stocks. And Lsis have a consistent financial report during their performance. However, it is predicted that domestic and global inflation is on an increasing trend and causes a decrease in the purchasing power of the public. Even so, the realization of Lsis performance, which is considered good and solid, which every year scores growth in assets, especially in their cash and equity. Another strategy that is considered to be helping the boost of Lsis performance is the opening of new outlets. And throughout 2021, Sido managed to record a net profit of 1.3 trillion rupiah, up to 35% on an annual basis. Meanwhile, Sido's sales grew from 20.55% on an annual basis to 4.02 trillion. Moreover, Sido will benefit more as it expands their target market through export market expansion. And in addition, Sido innovates new products and business digitalization strategy, which also will be a driving factor for the growth of Sido's financial performance. Therefore, in short term, there will indeed be a slowdown. However, in the long term, we will see a very big potential for MAPI to remain attractive, and therefore, we also allocated 10% for MAPI.
That's all from us.
It's your turn to invest now.
Thank you.
Bye!